Hey, what's up you guys? This is Junior Trader and in this video, I want to go over something very important, and that is how to approach trading. All in all, some general principles that should be on your desk or in your mind or learned by your heart. However you want to remember them. These principles should be there every time when you are trading. Okay. This all in all will help you to trade with high probability of success, have more winning trades, and come out net profitable. Okay. Now, as we go through in this video, I do have every time, as always, want to mention none of this is any financial advice. It's only for education purposes, just sharing my opinion. Please do your own thing. Just to make it clear, none of this is any financial advice. Okay, so now I will be going over 8 principles that I have here. This is the next slide, but I'll be not just going over this text over here. With every step of the way, I will be going over and providing you a real example. We'll go through the stocks, and you will, if you have any, look, like when I say if you have any concerns, what I mean, like trading is something that comes with experience. Okay, I'm here to guide you to cut down your learning curve and provide you a guided path so that you become net profitable. Okay, so when I started, decade ago around, there wasn't any proper guide. Okay, I had to learn through experiences. Even trading with on the desk, or you can say corporate places, you are still doing the things many of the times that you are finding your own way, because you would see around that not everyone also, well, they're experienced trader definitely, but it all comes down to how do you manage your trade. Okay, there is no written rule that if you do this, or this is how the market is doing, so you do this and that, or is there a black and white logic that you can just follow, like a like um every time a winning trade? No. Okay, and that's what the important part is, because many times, and that's the very first point here, is trading is not about every trade being successful. Many times traders come into the trading, thinking that they have to have every trade successful, right? They come in thinking that there is no way they can get any trade wrong. You can be only successful in trading if you have every trade right. If you get one trade wrong, you just don't know how to trade. That's completely false. Trading is not about winning every trade. Trading is not about only taking trades that you know for 100% are successful. Okay, because if you go with that mindset, that 100% successful trade, and if that very trade starts to turn against you, your ego would not let you get out. You will try to double down because you have convinced yourself that you can only take those trades that are successful, so you will try to get out of the losing trade by doubling down because you want to make that successful, right? So but then you will blow up your account. Okay, so it's not about, there is no specific guideline out in the trading that can tell you and teach you that every trade, how to trade, every trade that you take is a winning trade and will be a winning trade. There is no such thing like that. Even if you're looking at order book, right, you can only plan for the orders that are already in the order book that you are seeing. But what about the orders that comes as market orders? What about the orders that, even limit orders that comes seconds ahead of before the price is going to hit. Algorithm trading, right? Quant trading, right? You can never plan for everything. So if you think there are ways that you can plan ahead to get everything correct, and the trade that you will take is 100% successful all the time, and that's what will is a definition of successful trader, that understanding is completely flawed, completely irrelevant. If you are thinking that way, you have to unlearn that. Okay, you cannot approach trading with that type of thinking. So how to approach trading the right way? As I said, the first point is very much a summary, and a premise of the start of the video is that something that you have to unlearn is not to look every trade as that it has to be successful. That's the recipe for disaster, and it's not going to make you a better trader. It's not going to make you a profitable trader. So trading is not about every trade being successful. So what it is. Now, the next points, as we'll go through, I'll show you the examples of the stock's price action. Okay, we'll take a look at those, and that will give you a clear picture. So, trade the price action and not the P&L. If you are new to trading, um, you know, price action and the structure pretty much is the same thing. Price action is more of a it's more of an umbrella term. Price action, like structure, comes under price action, levels comes under price action, wicks, buying pressure in the wicks, candlesticks, the way the candlesticks are looking like, they all come under price action. So price action is an umbrella term, and so that's what I'll be using here going forward. Okay, so trade the price action and not the P&L. What does it mean? If you are trading the P&L, that this is how much today you have to make, you're not going to be profitable. Let's get to Tesla here. We'll use the 5 minutes interval to begin with. Okay, and this very last point actually goes over best intervals for day trade, swing trade, and long-term trades. I can tell you that right away. Let's cover this point as we will be using some intervals. Best intervals for day trade are 5 minutes and 3 minutes. You will see this in my onboarding video as well, that if you have joined my tools membership, then you would see this there. And in this video, we'll be using my tools, guys, okay? Because all these principles are already inbuilt in my tools, okay? So it's easy peasy. You just plug and play, and everything is right there in front of you. So, okay, best intervals for day trade are 3 and 5 minutes. I prefer 5 minutes, so I'll be using 5 minutes here. Swing trade, 30 minutes to an hour. Long-term trades, definitely an hour all the way to the daily. And you use weekly and monthly for reference there for the long-term trades, okay? So now that being said, let's get back to the second point, that is the trade the price action and not the P&L. So let's get to Tesla. Let's get to the 5 minutes interval. You are already seeing universal indicator is already applied on my charts. That's the automatic levels and a lot more other stuff that it does. Again, in this video, we'll only focus on the ones the items that I want to cover through these important principles. So we'll get to the levels point as well in just a moment, but let's turn on my easy day and swing trading tool. It takes into account the price action pretty much already for you. Okay, so easy day and swing trading tool. Let's take Tesla example over here. Right now, as I said, you are not trading the P&L. You may come thinking this day that I want to make this much money, or I'm in loss this much, then it's okay, right? So for example, let's say this particular day we opened right now here in the green structure and above the cloud when the market opened right here, right? So yes, technically you could have taken a start of a position here as a bullish trade because the structure is green, right? And it was technically, let me actually change here something real quick. Let's get to attentive mode on this tool. Okay, you will see orange and red and dark green and light green. So the meaning pretty much, guys, if you have joined my memberships of the trading tools, you know what these color means. Dark green is a pullback, bright red is definitely just a collapse, or red bearish continuation, orange is a rebound, and lime green or bright green is a bullish strength. But the point is that the dark green comes on the category of bullish, and the orange comes in the category of bearish with the red, and the dark green with the light green. So you get my point. So technically it's a part of a pullback, so not necessarily is a good buy here, because you still gotta wait. But what I'm telling you is that, though, yes, it's a part of a green structure, you would want extra confirmation with a bright green structure. But when we are in this type of a pullback, and if you're still wanting to start a position, you gotta have a small position, not a big position, because it's not an opening with a full strong bright green bullish strength structure, right? Anyways, I just wanted to tell you this right away, so that as we get to the other points that we'll get to, like position sizing is very important. That's where we will talk about this more. So let's get back over here now. To explain the price action point, I'm just going to keep it at flow. Okay, and let's talk about it. So what do I mean by that? You are trading the price action and not the PNL. So for example, over here, okay, if here you are thinking that, oh, I took the bullish trade already, and the next candle breaks the cloud, and it also, cloud is, guys, in the background, that green and red, the cloud, right? And then you are thinking that, oh, my loss acceptability is, let's say, $1,000 for the day. So I'm gonna just continue to hold or double down here. If you are thinking that way, then, and actually it will get more clear if I just, get rid of that. Then you are like, sometimes traders take a pre-market low and they say to themselves that, oh, I'm gonna average my position until the pre-market low. Okay, so but when you turn on the price action here, there is no point in even holding. Even if you have a loss tolerability, there is no point that you should be trading that. Okay, so as this position is turning in a loss, and this is a good example that to make you understand, it's not about every trade being successful. It's not about trading the PNL. It's about trading the price action. So what is the price action telling us in the next candle? Let's say a bullish trade is taken over here, right? What is the next candle telling us? It's telling you that structure and the price action is red now. There is no point in being in a bullish trade, and that's where you are taking a stop loss, period. Okay, and when the structure either turns red, and we'll get to the stop loss points as well, but many things are correlated, guys, so you will hear me talk about the points back and forth, but we'll get to the stop loss points specifically as well later. So the point is that here price action is changing to the red, you are shorting it, you are trading the red no matter what. And now the price is going down, and you are thinking to yourself that my take profit target was today, let's say $2,000, and I would be happy with that, right? And price gets to this significant level. Now significant level will give you a price reaction. Okay, and you are like, I got the significant level, I should just close my position. I made also $2,000, let's say, for example. Again, you are trading the PNL here. You are looking at your profits, you are looking at PNL. Please, no. Yes, it's great, you can definitely, and I would suggest take partial profits, but avoid closing a full position. These points will get more clear as I'll give you some more examples, but the point is that you are better trading here the price action. Structure is red, just continue to hold the short position, right? Just continue to hold the short position, and when below the cloud, if any green structure comes, that your sign not to play long, because we are below the cloud, right? That's your sign that, okay, it's time to start taking some more profits from your short position, that is closing your short position, right? So that's what you have to trade the price action as. Okay. And also guys, the thing is that sometimes you would see, let's say if this is a great example, a choppiness day. Yeah. So okay, now the reason I'm saying is that you're not trading the PNL, you should trade the structure, is for the reason, and it's a choppy day guys. I'll tell you what to do during the choppy days as well. So you're technically just following the structure, and I'm on the passive mode. On the active mode, things may look a little bit different because that's a trading strategy across the active mode. Now, what's the difference between passive and active mode? My trading tools videos goes in detail to explain that concept. Okay, please check those videos out. So here, right, like why am I saying you should not trade the PNL? So let's say you took this long trade, first of all, and technically price reaction is happening at the significant level and a bit of a level above as well. And let's say here, for some reason, you entered here and but you didn't take partial profits, or you didn't see the price action come down, which is okay. No one is expecting you here to be very precise. Here, most of the time, yes, you may not take any profits because the move is very little, right? It's technically a part of a pullback. But here, the structure is red. Technically, we are not below the cloud. You have a bit of a leeway. But this is at least your signal that, okay, you should start sizing down whatever long position you took. Though we are not below the cloud, so it's not an active short. But it's actually a sign, okay, start getting careful. And now in this case, you are maybe a little bit in the loss. You see a remaining position run up, and then you are thinking to yourself, I had a 100 share position. I took out, let's say, for example, 50. Let's just take an example. You took out 50, left with 50. And you see the price action go up here. You are seeing significant level and a candle forming again and losing it. Here, if you are just trading PNL, your psychology will tell you that, oh, you took a loss early here. You want to now recoup those losses and get to the 50, make the money back. And so you will continue to hold because you want to make your money back, right? Because of this nature of the price action. And so that's the whole point. And sometimes you would not even get out here. But that's the whole point. If the price action is slowing down, and this is where the attentive mode will come helpful, is because this will give you a series of pullbacks. Now, one pullback, two pullback is fine, but 3, 4 is not good, right? It's then turning eventually weak. And this is where you gotta abide. Yes, sure, if this day is a loss, let it be. You gotta, the structure breaks, you have to start getting out, and here it's also losing the cloud, right? So if you are thinking that, oh, it had red hair and red hair, it will come back again, no. And that's where you are mistakenly trading the PNL, not the price action. So you gotta let it go. Yes, it went down, and this is where it rebounded. Yes, it's a choppy day, and during the choppy day, it's okay, guys, if you don't make money. That's the whole point. It's not about trading the PNL. It's not about every trade has to be successful. It's about staying with the structure. Technically, you can be still net profitable if you just trade the structure here. Yes, it will be a lot of scalping, but you can see it's a short play here, right? But below the cloud, you're mostly looking like at when the cloud is red and all, you're mostly looking at short plays. So this is the only successful last particular trade you will get, right? Most of it. You technically, this is also a successful trade. I was able to make money here as well, but it comes with experience. The point is that trading the structure and the price action is what you are doing, and that's what this tool helps you with. That is Easy Day and Swing trading tool across all the intervals. I'm showing you for the day trading right now, but you can use it on the swing and the long-term trade as well. All right, so it's about trading the price action and the structure, not the PNL. Okay, because, and during the choppy markets, just take two trades. If your two trades are not successful, guys, for a given day, you have to call it off. That day you have to call it off. Okay, otherwise you're gonna be very stressful, you're gonna lose the patience, and it's just not worth it. Okay, so now we can take more examples as well here. Similarly, here That's okay. It's below the cloud, red structure. Sure, if you happen to take it, not a problem. Not a problem. But once you start using these levels as well, guys, significant level down here and multi-time frame analysis, you can catch off these false negative breakdowns easily. Multi-day time frame analysis is very important, but if you just follow this easy day and swing trading tool, you will be just fine, okay, for whatever type of interval trading you are doing. So for example here, sure, if you happen to take a short play here, not a problem, not a problem, but you are getting out here with a stop loss and you are taking this run up to the bullish side and full exit. Technically, this is where technically your range, this universal indicator will give you the range as well here, right down here on that dashboard. You can use that to map your, okay, the extension, how much has happened for the day and is it time to fully take out profits. And or you can see we reached our significant level, you are taking profits, you can see it's reacting right there. And then if any position is left red above the cloud means bullish position, get out, you are fully out. Trade the structure, trade the price action, not the P&L. Okay, that's where easy day and swing trading tool is very helpful. Okay, and if you happen to watch this video and if you are not a member on my trading tools membership, then you can join the trading tools membership by following the links in the description of this video. Okay, so okay, now so that covers our second point, that is trade the price action and not the P&L. Okay, many of the points are already covered here as you will see, but I'll still provide you specific examples as we'll go through. Position yourself with the market. Pretty self-explanatory, right? What I just explained, right? Position yourself with the market. It's not about what position you started with or what's in your mind that what type of trade would happen from here. Let's turn that. Let's see, it's so easy. Easy day and swing trading tool. Let's turn it on, right? If you happen to take a short here, yes, you are aligning yourself with the market here, but you are not aligning yourself with the market here then, right? When the price comes here, you have to realign and align yourself with the market, right? So you are getting back in the bullish trade. Okay, so that's what pretty much this point says. Position yourself with the market. All right, position sizing is very important. This is a very important point. Position sizing is very important. So what does it mean? Let's talk about that. Let's just use this over here, this very example, or we can use the recent example as well, this particular fall that happened on Tesla here, the short play. I know many likes to, I mean, there are a lot of short traders as well. I have members on both ends. Some likes to be on the bullish trades, some likes to be on the short plays, and I have some members who like to take both trades. So anyways, whatever suits you. But so position sizing is very important. Okay, so let's say so I told you an example, right? When we had the attentive mode here, I explained you this as in this video. Let's turn on the attentive mode on this tool. It's technically in the bullish structure, but it's a part of a pullback up here. So let's say if you're planning to start your trade with, let's say, 100 shares, I'm just taking it as an example, okay, or 5 options or 1 option or 2 option, whatever. If that was your original plan as a full size, 100 shares or 5 options, whatever you're doing, with this pullback structure, even if you're planning to start a bullish trade here, since it's a pullback start, consider half of your position, not full size, okay, or 1/3 of the position, not the full size. Let the price action evolve. All right, so here you would be doing, let's say 50 shares instead of 100 shares, or 2 options instead of 5 options. I'm just using examples here, right? And when the structure gives you final confirmation with the break, now it's a short side play, because below the cloud and a red structure, it's giving you confirmation to the downside play. That's where definitely you are taking a stop loss on your bullish trade that you started, if you happen to start that, and you're opening a short play, okay, and the once you have a good strong confirmation, because in this case it's a full red, it's not a rebound start here, right? It's a full red. You can start a full position here, okay, below that cloud. Now the point is that because it's this, when the structure and the price action just changes, the place and the point where it just changes from bullish to bearish or bearish to bullish or vice versa based on the condition, that's the best place to start the position. But let's say you happen to be in the kitchen or something, right? You're making your coffee and the price moves down here. But then you see come here and you see in the dashboard, oh, well, there's a lot of range left for the day from the average range comparison, right? Right now it's showing what is already where the market is right now, but these things will show you real time running numbers as per the when the market is open, right? And it will, you can then see if the today's range, there's still a lot of range left for the Tesla to do for the day. And you say, okay, I can still take a trade, but you are already seeing candles have moved. Price, it was bearish here. It's still bearish here, but it has moved some length. Avoid going full size then. If you're trading here, then starting a position here, then avoid full size. You can have a small position, no, not a small, fully small position, but you can have like less of a full size. Okay, you can have, let's say, 60 shares or 75 shares instead of 100 shares, right? As an example. The more the price has moved from the initial change, the less of a position you should be opening, because you want to give yourself a possibility if the bounce happens, in this case a rebound, to add more to your position. And or because what also happens, your stop loss technically is where, and this is where we'll also talk about now proper stop loss. Oops, no, not thank you right now. We'll get to that. It's, yeah, let's get rid of that. We'll get to thank you later, but proper stop loss, the point here is pretty much part of it as I'm explaining, is that because your stop loss would be at a place, as I explained here, where the structure changes. Now here, when the structure changes to the right side, you're taking a stop loss, and or on the other side of the cloud. In this case, if you happen to take a bullish trade, this is where your stop loss would be for the bullish, or right when the structure changes to the red. All right. In this case, if you happen to take a position here, the reason I'm saying, since the length has happened, your stop loss is far away. So it's not worth it to have a big position, because then if the price rebounds, you will be in a lot more drawdown than you should be, because best place to start off a position is here, and then stop loss right above there, the cloud or the change of the structure, right? That will help you to have a proper position size. Now let's talk about this real quick with the example right over here. Okay, now here I'm gonna go back to so you can understand, right? With attentive mode, it's orange because it's a rebounding. Okay, and pretty much the point here is that this is where you have to write proper position sizing. Right when the structure is green, you start a bullish trade with the stop loss below that. And if you happen to take a short down here, you can start sizing down already in this orange structure. And because it's orange, is rebounding, or you can a little bit hold off as well because it's still below the cloud, but the next very candle is where you're fully getting out. The sizing down would make sense, as I'll show you some other examples in a moment. Okay, we'll get to those points as well. For a moment, let's just get to the flow mode again. All right, and so that the concept is what I can explain you more properly. Red structure, you have a position, no problem. It turns out you are in the bearish structure, sorry, you are in the bullish structure now. You are getting out of your bearish position, okay, and you are starting a long position right over here. If the price has moved and then you are thinking of now starting a position, you should have a small, not a full position size, a less of a size, because your stop loss is either at a change of structure, which right now the previous recent change of structure was here, and which is around the cloud as well. So your stop loss has to be below that. So the further it is away from your stop loss zone, the lesser of a size of a position you should have from what you were initially planning for a proper stop loss management. Okay, so position sizing is very important. Now the fifth one is size in and out the position. Now this can be, again, this can be improved upon over time with experience. Okay, and this is where I wanted to bring out this point here. Let's get to back to the attentive mode. And this is where I was mentioning that when you start doing multi-time frame analysis and all, this is where things like we have a red structure, that's fine, but a rebound is happening from a significant level. And if I show you a higher level picture here on Tesla, Tesla is and was in the bullish strength here. And let me show you on the hourly interval. I don't know where it is though. Now it was, I think 2 days ago, right? Right over here. Right over. Okay, let me actually go back to the 5 minutes. And what I'm gonna do is, yeah, 1, 2, 3rd. Okay, this is where we are talking. Let's get to the hourly interval. And this is on the hourly interval. 1, 2, 3. Here we go. So Tesla here was already a little bit in the multi-day strength here. Okay, because we already were above, getting above second significant level from the previous level. So these significant levels, how to use them, they are support and resistance, and the basic premises is that, when we have regained a significant level prior to the one that was gained before, that's where, from if we are from coming down and we have gained two significant level in a row without losing the one prior, it's back in the strength pretty much, right? And again, like these things, I have explained in my other videos. That's not the focus of this video, but what I'm trying to tell you here is that multi-day time frame analysis is telling us that we are bullish here, right? So that's what is where will help you to know that that these type of things, you don't have to worry about them, and you can already, let's turn on that tool again, easy day and swing trading tool, and when the rebound kicks in, that is the orange, you can start sizing down your position. Okay, and this is on like the minimizing your losses and getting out properly early. And in the case of your trade is going in your position, you are already bullish here, you are trading bullish. Now sizing in and out the position is very important, right? And so that's what we are talking about, size in and out the position, right? So here you have a good bullish confirmation, pullback can be added into the pullback because structure is bullish. Now when we are getting extended, that's where you got to start sizing down your position. You are already seeing price has moved good length, little bit under the significant level, you are seeing a bit of a rejection and a sideways action. Consider taking some partial profits, that is sizing down your position. Okay, and this is where hitting the significant level, multiple pullback candles are coming, and most likely their range would have been completed also on the dashboard. That's where you are sizing down more of your position. So let's say you had 100 shares here, you took out 25 shares here, you took out 25 shares here, you are left with 50 shares or whatever, or let's say you took out 30 shares or 40 shares here, because in the extensions more up with the completion of the range, you should take out more shares in profits. And let's say you are left with 30 shares and you are like, okay, let's see what happens. When the structure breaks here fully, right, or it's your sign, we are above the cloud, but it's red, it's your sign to get out of the bullish position. You are fully getting out of your remaining whatever shares you had or options, whatever you are doing. Okay, so it's important to size in and out the position. Okay, proper stop loss, guys, I already explained you this concept in many examples here as we just went over. Is right when the structure changes, right when the price action changes, is where you have to have your stop loss. And together with position sizing, I just explained, it's already explained in the points above. So, oh, not thank you yet again, right? So please just revisit those points by rewinding the video or however. Okay, let the winners run and cut the losers quick. Again, we just went over through many examples here. I'm going to keep this easy day and swing trading tool turned on, guys. Again, if you need access to my tools, just check out the details in the description of this video. Get access to my tools, guys. With this, you will be a profitable trader. Okay, I do trading my full-time thing, guys. Okay, so it's doable. Okay, so now here Tesla is, what is it doing? And these tools are built by me based off of my experience over the course of years. Okay, the things that have made me profitable are all in these tools. Okay, now, so what were we talking here? Which point we are on? Let the winners run and cut the losers quick, right? For example, here, if you would have, let's say, started a bullish position there and you just, okay, let's actually turn this off. And for any reason, let's actually get back to this one here. This one is because many traders like to trade bullish positions, so it's a better example. So for any reason, let's say you started a short position here, right? You can ignore these moving averages, guys. These are for reference only. You know, moving averages are lagging indicator. Like many traders like to trade, you know, with moving averages, but they are not profitable that way, guys, because what would you do here, right? Like we are, this 200 is like, sorry, 2050 is below 200. By the time they even get up, price has already moved. Are you going to take a position here? No, the price has already moved so much, right? So these, I like to just put them here for a reference, just to you know, see some for reference, but don't use them for your trading decisions. The moving averages, the moving averages were always supposed to be used for reference, but over time it's just, you know, it just become a thing of a people to say and use it, but they will not give you a proper trades. You will always be late because these are lagging indicator. Okay, so as I just told you, moving average just went above the 200 right over here and the price is already here. Do you want to take a trade there, or let's turn on my tools, or do you want to take a trade starting right over here, right? You get my point. So okay, so let's say you took a short here and then you are thinking to yourself, well, I can't be wrong, right? I took a short play and this has to be successful. And if you keep doubling down as the price goes up, you're going to blow up your account. Don't double down in the losing trade. You got to pivot, and you use the tools, you know where to pivot, right? And then you let the winner run. As I explained in the starting of this video as well, unless the structure is not breaking, what's the point to take also like fully getting out? No, when only structure gives you a sign, yes, you should take partial profits in the extensions using all the principles as I explained, but don't, well, you know, no profit is bad, right? All profits are good. But what my point is that let the profitable positions run, let the winners run, and cut the losses quick. That's the way to be profitable. And definitely sizing in and out the position, you know, taking partial profits and all that stuff as I explained is what you have to implement with that principle. Okay, very easy peasy to understand, right? Let's get back over here. I also explained you just now, never double down the losing trade, right? Always cut down your losers quick. The last one, I also told you already, best intervals for day trade, swing trade, and long-term trades, right? Okay, so technically those were the high-level concepts I want to go over in this video. Tools will make your life very easy. Many of you watching this video are already a member on my tools membership, and you already know what I mean. You have been member for years now. I really appreciate that, and you have been using it, and I know you have sent email to us multiple times thanking that how beneficial the tools have been for you and how they have made you profitable, and really appreciate for those feedbacks. And that's pretty much what it is, guys. Okay, the tools will make your life easy. They will tell you how to trade and use these principles. I'm just going to turn that off. I'm going to keep the universal indicator turned on. But significant levels and all are also very important to accordingly manage the position, but that's not the focus of this video. The focus of this video was to go over these concepts of how to approach trading. Okay. And yeah, so easy day and swing trading tool and universal indicators, these are must to trade with, as if you want to be a successful trader, and you need to trade with a proper uh, you know proper tools. You have to trade with the proper tools, you have to trade with the proper plan and the proper trading principles, and these are all inbuilt in my tools. Okay. And if you need access to my tools, details you'll find in the description of this video. If you already have them, all good. You know already what I am talking about. Definitely these concepts are something I wanted to go over, right? Because this is where is what will make a difference. You have to approach trading this way. Okay. All right, guys, if you found this video helpful and valuable, please hit the like and subscribe. And now I can finally get to this slide. Thank you for watching. I really appreciate your support. And with that, I'll see you in my next videos. Take care, guys. Bye.